Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional.
So, in this world just constantly buzzing with new information, especially in tech, it moves so
It
fast.
really
We
does.
know you're looking for ways to cut through that noise, get a real grasp on what's actually happening.
Yeah, to understand the complex stuff quickly.
Exactly. And that's what we try to do here. Today, we're going to pull back the curtain on the latest quarterly earnings from a company that's maybe behind the scenes a bit, but is fundamentally shaping, well, everything digital, really. ARM Holdings.
Right, they're foundational. Really positioned at the absolute heart of computing innovation,
Yeah.
powering tiny sensors all the way up to massive data centers.
So our mission today is to sort of extract the most impactful stuff from ARM's recent earnings call.
Not just the numbers, though the numbers are impressive.
Right, not just the numbers. We want you to understand the strategic shifts, the underlying trends that are really reshaping tech,
Yeah.
especially, around AI. Yeah, that's the big one. We're looking for those moments that kind of give you a clearer perspective on where this is all going.
So instead of you digging through pages of dense transcripts full of jargon.
Which can take hours.
Oh, absolutely.
Yeah.
Our aim is to give you a clear, comprehensive understanding of what's truly significant, what you should pay attention to, and what it all means for, well, the future of computing.
Consider it your shortcut, hopefully with a few interesting bits along the way.
Let's unpack this then.
Okay, let's jump right in with the financials because Q1 fiscal 26 was, it was a landmark quarter for ARM.
Big time.
Yeah, not just their best Q1 ever, but it was actually their second quarter in a row breaking that billion-dollar revenue mark. Hit $1.05 billion.
Wow. That's not just a good quarter. That signals something bigger, right? Like
No.
real acceleration.
Exactly. It speaks volumes about their trajectory and their growing influence.
So if we break down that revenue, the royalty part really stands out. A 25% jump year on year. $585 million, a Q1 record.
It's a huge leap for that part of the business.
What's driving that? Is it just one thing? Or
Well, that's what's really fascinating, actually. It isn't isolated. You often see tech booms focused in one sector, right?
Mhm.
But this royalty growth, it's broad. It's across all their main targets.
Okay.
Smartphones, yeah, that's their historic strength, and they're getting higher value from ARMv9 adoption there.
Okay.
But also, data centers, which are exploding, automotive, which is getting super complex with software-defined vehicles, and IoT, the Internet of Things. Billions of devices needing efficient compute.
So it's everywhere. Their architecture is becoming kind of fundamental across totally different tech areas.
Pretty much like the underlying fabric for innovation, whatever the device is.
Okay, so then the other side, licensing revenue, $468 million. That was actually down slightly year on year, about 1%.
Right, but that was compared to a really strong quarter the year before. And that top line number, it can be a bit misleading sometimes.
Because of the ACV thing, right? Annualized contract value.
Exactly, you hit the nail on the head there. Licensing deals, they're often big, bespoke agreements. They land at different times, so revenue recognition can bounce around.
Makes sense.
ACV gives you a much clearer picture of the underlying health, the growth trend. And in Q1, ACV surged, an amazing 28% year on year.
28%. Wow. That's way above their usual, isn't it?
Oh yeah, way above their typical sort of mid to high single digits. It signals really strong customer commitment to ARM platforms, future solutions. Basically, the long-term pipeline of deals is incredibly strong.
So even if the cash lands a bit unevenly, the commitment, the future business is really accelerating.
That's the takeaway. It gives them real forward visibility.
Okay, so putting it all together, record revenue, broad royalty growth, that surging ACV, these aren't just numbers on a page.
No, they're concrete indicators of ARM's influence growing, almost inescapable, really, across so many sectors.
So for you listening, trying to stay ahead, what does this really tell us about the big shifts happening in computing right now?
Well, it connects directly back to ARM's main message. The insatiable compute demands of AI, that's the engine driving this momentum.
Insatiable. Good word for it.
It really is. Because
Yeah.
AI isn't just in giant data centers anymore, it's everywhere. Tiny smart sensors processing locally.
Right on the device.
Exactly. All the way up to those massive supercomputers and cloud systems running the latest large language models. And this huge spread of AI needs compute that's not just fast, but critically super energy efficient.
Efficiency is key. because efficiency means lower cost, sustainability, being able to actually do AI at scale.
Precisely. And this is where ARM makes its really bold claim. They say they're the only compute platform that can deliver AI performance across that whole spectrum.
The milliwatts to megawatts line.
Yeah, I like that line. It really captures the range, the versatility of their architecture.
It's a huge range. Milliwatts is like nothing. Megawatts is, well, a lot.
It is. Think about it like this. Maybe an analogy helps. Imagine one basic architecture. That could power a tiny wearable, like a fitness tracker, running on a coin battery for months, using just milliwatts.
Right, super low power.
And then that same basic architecture could also power a massive data center, thousands of servers, consuming megawatts, like the power for a small town.
That really drives home the flexibility. It's why they're so critical for making AI truly ubiquitous, right?
Yeah.
Efficient AI everywhere.
That's the argument. From the tiniest edge device to the biggest cloud server, it's a huge differentiator in the AI era.
Okay, that versatility, that power range leads us perfectly into the data center because that's becoming the absolute heart of the AI revolution.
It really is. And ARM's Neoverse chips are making, truly dramatic gains there.
The key stat is just stunning. Neoverse chips projected to hit nearly 50% market share among the top hyperscalers this year.
50%. That's not just growth. That's like a fundamental shift in the cloud's architecture.
It is. And you have to remember where they came from, right, to really get the scale of this.
Absolutely crucial context. Just 1 year ago, their share in hyperscale data centers was sub 20%, probably around 18%.
So less than half of where they expect to be this year.
Exactly. And go back to 2021, it's a 14x surge since then. They basically weren't even a major player just a few years ago.
14 times. Wow. So what's driving that explosion? Is it just general compute or specifically AI?
It's both, actually. They're gaining share in general purpose compute, taking on by 86 directly, but they're also capturing a massive slice of the brand new AI workloads. Think about NVIDIA. Their older Hopper platform used an external by 86 CPU. But now, Grace Blackwell, the GB200, GB300, they've integrated an ARM-based CPU right alongside the GPU.
So NVIDIA themselves made the switch internally for their top AI systems. That's huge.
It's incredibly impactful, shows a deep commitment from a key player.
And it's not just NVIDIA adopting this, it's the who's who of cloud and AI, right?
Absolutely. NVIDIA Grace, AWS Graviton, Google Axion, Microsoft Cobalt, these are the engines running the world's most critical AI infrastructure. And they're all built on ARM Neoverse.
That level of adoption by the biggest players, it shows immense trust in ARM's architecture as the future.
It does. And a big part of that trust comes down to the efficiency advantage.
Right, the 25x number for Grace Blackwell.
Exactly. 25 times more energy efficient than previous by 86 systems for certain AI jobs. That's not incremental, it's foundational.
And the implications are massive for these huge AI deployments.
Totally. Less energy means lower operating costs. These data centers have huge power bills. It means better sustainability, hitting those green targets. And ultimately, it means more powerful AI delivered more affordably at a bigger scale.
It changes the whole economics of AI infrastructure, makes advanced AI more accessible.
It's a genuine game changer. And technically, it often comes down to tighter integration between the ARM CPU and the GPU, better data flow, less waiting around, which is critical for AI tasks.
So for you listening, this isn't just a market share battle. It's reshaping the tech that powers the AI revolution. 25x efficiency. That means cheaper, more powerful, more sustainable AI for everyone, eventually.
It's a deep underlying shift in how the digital world gets built.
Beyond just efficiency and market share, ARM's architecture offers other strategic pluses for data centers, doesn't it? Like customization.
Yes, that's a really key aspect. It allows for an exceptionally high degree of customization. You're not just buying a chip off the shelf.
You can tailor it.
You can tailor it at the chip level, the blade level within the server, even the whole rack level. This kind of granular flexibility is huge for optimizing the total cost of ownership, TCO, and squeezing out maximum performance for specific AI workloads in these super complex environments.
Being able to tune your compute exactly to your AI needs gives you big gains compared to more rigid architectures.
Definitely. And there's another benefit, sometimes overlooked but really important for the hyperscalers managing millions of servers, maintaining a single software stack across the data center.
Sounds technical, but I can see how that simplifies things massively at scale.
It's huge. Streamlines management, cuts operational complexity way down. And that makes ARM more attractive, driving further share gains because it just makes life easier and more efficient for their customers.
A unified software stack. Developers write code once, Deploy it anywhere from the edge to the cloud on ARM? Less hassle.
Exactly. Faster development, less debugging, better efficiency overall. Now, an analyst did ask a good question.
Yeah.
If ARM's hitting nearly 50%, why would customers still use x86?
Good question. Inertia. Legacy stuff.
Yeah, exactly that. There's significant inertia. Legacy systems, software optimized for x86, established ways of doing things, they don't vanish overnight.
Makes sense.
But ARM sounded really confident about growing beyond 50%, and that confidence comes from those benefits: customization, efficiency, plus the ARM software ecosystem maturing and getting optimized really quickly.
The better the software support, the easier it is for customers to switch or expand their ARM deployment.
Precisely. Less friction.
And this ties into another thing we heard. Hyperscalers are seriously ramping up their CapEx, their spending targets. That sounds like a massive tailwind for ARM, doesn't it? A huge wave of investment coming.
It's not just a tailwind, it's a powerful surge. Increased capex from the biggest cloud players means sustained, almost desperate demand for AI compute.
They're pouring billions more into AI infrastructure.
Tens, maybe hundreds of billions more. Building out servers, upgrading data centers. And since ARM is increasingly at the heart of these new efficient AI designs,
It flows directly to ARM's licensing and, crucially, future royalties.
exactly. And connecting that to the bigger picture, this vision of AI touching literally every industry: healthcare, finance, manufacturing, entertainment.
Everything.
And ARM, being the platform from the smallest device to the biggest cloud, is right there in the middle of it all, enabling AI wherever it needs to go.
Okay, so we've covered the massive shift in the data center. But AI isn't only in the cloud. There's this big push for AI at the edge, right? Closer to where data is generated.
Absolutely. Local, real-time intelligence on devices without constantly hitting the cloud. And ARM is critical here because of that efficiency and scale they offer.
So what Sapisic Tech enables that?
Well, their compute platform offers that unique combo of AI acceleration and energy efficiency. Think about things like their Ethos U85 NPU.
The neural processing unit.
Right. Specialized hardware for AI tasks like image recognition, doing complex stuff efficiently right there on the device, saves bandwidth, cuts latency, improves privacy.
And then there are the new CPUs.
Yeah, the V9 CPUs with scalable matrix extensions, SME, crucial for speeding up the math behind large language models and other AI algorithms, boost performance for on-device AI assistants, things like that, but keeps power use and latency down.
Which is key for battery life and a smooth experience.
Exactly.
And this isn't just theory, it's in phones now.
Oh, yeah. Apple, Samsung, MediaTek, the big guys are integrating these ARM AI features into their latest chips. Faster, more efficient AI on premium smartphones. You're seeing it in advanced camera stuff, on-device voice assistants.
It's already here.
And the potential for Ethos, specifically, is really interesting long-term.
How so?
Well, it's not a data center thing. Its focus is super low-power, tiny form factors that hints at uses beyond phones, like on-body AI acceleration.
On-body, like in wearables.
Yeah, smartwatches, maybe smart clothing, tiny sensors and medical implants, running AI with minimal power for a long time. It makes AI pervasive in totally new ways.
Wow. Okay, shifting gears slightly, but still related to expansion. ARM's compute subsystems,
Yeah.
CSS. Demand there has exceeded expectations.
Yes. And that signals strong market validation for a higher value, more integrated offering from ARM. It feels like a pretty significant strategic move.
More than just licensing IP, right?
Absolutely. And the impact is substantial. Their first-gen CSS already gets double the royalty rate of a standard ARM v9 license.
Double the royalty for the same chip volume, basically.
That's the idea. But here's where it gets really interesting. This last quarter, they signed 3 new CSS licenses. And crucially,
They weren't just new customers.
no, they were upgrade deals with existing CSS customers. 2 for data centers, 1 for PCs.
So customers tried CSS, liked the benefits, and came back for the next generation, willing to pay even more.
Exactly. It validates the whole strategy. Customers see the value: faster time to market, less complexity, because ARM did more of the design work, better optimization, and they're sticking with it and scaling up.
And these next-gen CSS platforms, the royalty rates are even higher.
Even higher. ARM called them the highest royalty rates we have seen to date, specifically north of 10%.
North of 10%. Compare that to older stuff.
Well, standard ARM v9 was maybe around 5%. ARM v8 before that, maybe 2.53%. So you're talking potentially 4 or 5 times the revenue per chip compared to an older design.
That is a massive uplift. It shows they're successfully moving up the value chain.
Definitely. Moving from just selling blueprints to selling more complete, higher value solutions that solve real engineering headaches for their partners. De-risking chip design, speeding things up.
And we're seeing these in actual products.
Yeah, tangible examples. The Xiaomi XR01, the Samsung Galaxy Flip 7 using the Exynos 2500, both based on the latest ARM CSS platforms. Real products, high volume.
So for the listener, CSS isn't just some future idea. It's happening now, driving royalty growth and showing ARM capturing more value per chip.
It's a key part of their future growth story.
Okay, from mobile and edge, let's talk automotive. Another market being totally transformed by AI. ARM introduced Zena CSS specifically for cars, right? Autonomous driving and such.
Yes, Zena CSS, optimized for those complex, safety-critical AI workloads in cars. It's a very strategic move into a potentially massive market.
And why is automotive such a good fit for CSS?
Well, ARM said it's an excellent candidate for a few reasons. Unlike chip companies, car makers or their main suppliers often don't have decades of super deep chip design, SoC design experience.
They're car experts, not necessarily silicon experts.
Exactly. So they really benefit from ARM providing more of the pre-verified design work, accelerating their time to market with these complex subsystems.
And Zena is aimed at ADS, the driver assistance systems.
Yeah, likely landing in L2 to L4 ADS applications. The brains behind autonomous features perception, decision-making, control.
And ARM already has a foothold in cars with software, right?
A big one. There are huge amounts of software investment and software stacks that run on ARM already, both in infotainment systems and existing ADS.
So it's a natural fit to offer a more integrated hardware solution, too.
Creates a powerful tailwind for Zena. And the fact that a lead customer already signed up for Zena CSS.
That shows strong early momentum.
Very strong. In a crucial high-growth market. ARM also hinted at a very strong pipeline of deals for Zena. Lots of future licensing and royalty potential there as cars get smarter.
So ARM is positioning itself to grab a big slice of that automotive compute growth by offering this more complete solution.
Exactly. De-risking it for the auto industry.
This expansion, the move to higher value stuff like CSS, it leads us to maybe an even bigger strategic shift. ARM's relationship with SoftBank and this huge Stargate project.
Yeah, this feels like ARM moving beyond core IP into something much more collaborative, maybe even higher stakes.
The relationship with SoftBank, their parent company, has broadened.
Significantly expanded, aimed at helping SoftBank build their greater, broader AI vision, which is a colossal goal.
And Stargate itself, joint venture with OpenAI.
Right. SoftBank and OpenAI, the ambition is just staggering. Scale up to 10 gigawatts of compute over several years.
10 gigawatt, that's hard to even picture, like multiple power plants.
Or enough power for a medium-sized city. It's building an entirely new, gargantuan AI infrastructure, redefining what's possible.
And ARM is right in the middle of it.
Right at the heart. They emphasize all current Starbase opportunities use ARM as the core CPU. That positions them foundationally in maybe the biggest AI project planned anywhere.
It's a cornerstone for the future of AI development.
And what's really fascinating is the partnership isn't just about current platforms. They're explicitly exploring opportunities beyond current stuff.
Like what?
Additional compute subsystems, maybe even more tailored than current CSS. Chiplets, those modular chip building blocks, and potentially even full-end solutions.
Full-end solutions, that's a huge step.
It's a profoundly significant strategic shift. For you listening, it means ARM is moving way up the value chain, potentially shifting from just providing blueprints to being a much more active, integrated solutions provider.
Unlocking new revenue streams, strengthening their market position by embedding deeper with key AI players.
That seems to be the plan.
And to support all this ambition, they're boosting R&D spending.
Understandably, yes. Accelerating investment, expanding engineering teams, pouring resources into product investments.
Which brought up that analyst question. Is ARM getting into the ASIC market? Application-specific integrated circuits, providing full-end solutions.
It's maybe one of the most critical questions about their long-term strategy. And their answer was revealing.
What was the rationale?
Customer demand. Plain and simple.
Yeah.
Especially newer customers, like the big cloud providers, OEMs. They're asking for a better starting point.
Because designing these complex chips, SoCs, is just incredibly hard, slow, and expensive now.
Astronomically complex. Takes years, costs hundreds of millions, maybe billions. So customers want more pre-integrated, validated stuff to speed up their development and cut risk. ARM providing these more complete build blocks or even full designs saves them huge amounts of time and money.
And ARM isn't starting from zero here. They have expertise in chiplets already.
Yeah, they support chiplet development through their ARM Total Design ecosystem, and lots of existing chiplets use ARM IP anyway.
So they feel they have the tech and expertise to do this.
Yeah.
Design, implement, even oversee manufacturing.
They expressed high confidence they either have it or can access it. It's within their grasp. Combine that with their unique position, milliwatts to megawatts, covering the whole spectrum.
It allows them to offer integrated solutions others can't.
Right, which brings up that really interesting question for you, the listener, to think about.
Does ARM become a competitor to its own customers, its licensees?
Or does it provide a new, higher value service that actually accelerates the whole ecosystem, grows the pie for everyone, and makes ARM even more indispensable in the AI era?
It's a fascinating strategic balancing act, potentially transformative.
Definitely one to watch.
Okay, let's bring it back to the financials and the outlook. Royalty growth was a touch lower than maybe expected, mainly due to smartphones.
Yeah, the smartphone sector grew a bit slower than hoped. But even so, ARM's royalties in smartphones still grew, quote, an order of magnitude faster than the market itself.
Which is still pretty impressive given how mature that market is.
It speaks volumes about those increasing royalty rates per device from ARM v9 and continued share gains. And like we said, licensing revenue bounces around.
But the ACV growth, 28%, shows the real underlying strength, driven by those CSS deals, the SoftBank relationship.
Exactly. That ACV growth points to future revenue streams already contracted.
How about the China business? Amidst all the global shifts in trade stuff?
Still exceptionally strong. ARM China was 21% of Q1 revenue. That's up significantly from 15% last quarter, 14% a year ago.
So, growing nicely.
Management confirmed it's strong and continuing to grow nicely in line with global trends. And importantly, they said it was unaffected by those recent H20 GPU export controls.
Interesting. So their foundational IP is still on high demand there, regardless of restrictions on specific high-end chips.
Seems so. Their model is more about the underlying architecture.
Okay, operational spending. R&D led the charge. OpEx hit $619 million in Q1, expected to go up to $655 million in Q2 due to timing and FX.
Right, and you have to see that as strategic investment, right?
Yeah.
Betting on the future.
Absolutely. It's not just cost. It's funding the next-gen architectures, CSS, software, the things that drive future revenue. They're investing aggressively to capture the AI opportunity.
And you mentioned FX, foreign exchange. It did have an impact, about a $0.01 win-win to EPS in Q1. Expected to continue around that level each quarter this year.
Because they get revenue mostly in dollars, but pay a lot of expenses in euros and pounds.
Exactly. About 2/3 of OpEx is EUR/GBP, so currency swings can bite into profit.
So wrapping it all up, looking forward, what's the guidance and confidence level?
Okay, Q2 guidance. Revenue between $1.01 billion and $1.1 billion. Midpoint is about 25% year-on-year growth. Royalties and licensing expected roughly flat sequentially after that strong Q1, sort of a rebasing.
And longer term,
High confidence. They stated high confidence in healthy growth for this year and beyond.
based on what?
Visibility into customer design pipelines, future chips, contracted royalty rates from deals already signed, and just that booming demand for custom silicon and AI everywhere, cloud and edge.
And they're not just sitting back. They plan to keep aggressively investing in R&D.
To support customers, grab those AI opportunities, and fundamentally ensure AI runs on ARM. It's a proactive strategy to lead, not just follow.
So if we synthesize everything from this call, the big picture is ARM isn't just an IP licensor anymore.
No, it's evolving fast, becoming a critical enabler, a strategic partner, maybe even a direct participant in the most complex chip designs and AI infrastructure, building a deeper moat.
It's a really profound transformation. So for you listening, here's that final thought to chew on. Given ARM's expanding role, the higher royalty CSS, partnerships like Stargate, exploring full solutions and chiplets, how does this fundamentally reshape the semiconductor industry's competitive landscape?
Yeah, is the future less about individual companies designing chips based on licenses and more about these integrated collaborative compute platforms where ARM plays a much more direct role? What does that mean for innovation, for market leadership in this AI era where hardware, software, solutions, it's all blurring together so fast?
It's definitely a landscape shifting under our feet, and ARM is right there pushing the change. Lots to think about. Thank you so much for tuning into Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.